So the S&P 500 continued to consolidate today. We saw quite a bit of consolidation on both Monday as well as today. For Wednesday, Monday, of course, was a shortened session, and then Tuesday there was no trading at all because of 4th of July. But I'm still watching this potential cup and handle pattern that I referenced on Sunday. Remember, the key area of interest here is around that 4,420 level. This will decide if we end up having a move up to the high 4,400s, like in this range, or if this breaks, then we will see a downtrend back down to this minor low from back here. If you remember, this was the 18-day cycle for that reversal cycle, that is where we saw a nice clean reversal off of to the upside here back up to this key supply range. Remember, 4,450 to 4,500, one of the strongest ranges of the entire market that I have personally. This is a very strong resistance and inversely would be a very strong support if bulls were able to get above it. But of course, that's going to be very difficult because there is a lot of sell pressure up here. But again, I am watching this area of interest. I'd like to see some type of a dip here on Thursday, especially to get that retest to see if price can get a nice bid around this 4,420 level. Because remember, everything is dependent on this level. It is going to act as a key pivot. Anything under then has some more bearish bias. As long as it can stay over and have some form of a bounce, it of course can wick under if it wants within a 1 minute, 50-minute candle, etc. But you're going to want to see hourly closes above, especially the daily, to have continuation of the upside for that move to the high 4,400s before a more substantial pullback from the higher end of this supply range. But I also want to go over Meta here. I did reference this one in the Sunday video. We had a very nice upward move here for the break to the upside. If you remember the example trade setup I provided in that video, I said I was looking for hourly confirmation either above or below this range, and I would take a setup based off of that. Of course, the first hourly candle today spiked very high, a ton of volume behind it, and it continued all the way up for quite a while. This candle alone was almost 4%, so that was very substantial move. And of course, your risk is going to be enhanced if you were to take a position off of a candle like this. Preferably, it would have been a lot less, at least under this 292 level, and then I could enter on that. With it being so high up here around 297 mid, that again enhances your risk, because your risk in this case would be an hourly close back below the pennant, which is quite a ways away, about $7 away from the close on here. So personally, I didn't take a position on this, but the principle would remain the same in the future. If we got a nice close above, let's say at 291, 292, etc., that would be a nice position because you'd have that confirmation above. And in this case, it is flagging based on today, so we'll have to see tomorrow and Friday if it wants to have that continuation later. It is looking strong so far, and as long as it stays above this pennant, then it will continue to remain strong with some more upside to come if it chooses to do so. So keep that in mind. As long as it stays above the pennant here, you can see some more upside. Otherwise, it would be a fake breakout if it broke down below. So just be aware of that going forward. Also, I mentioned in the Sunday video, Nvidia, we're still stuck within this range. This is just a rough range of it. We, of course, have the support down here as well as the resistance up here. Until either of these breaks, you're not going to see a substantial move. It's just going to continue to trade between it, kind of like what we saw over here. We had near the lows here for a nice support, and then of course I bounced off the resistance, and we've continuously done that now. So until either side here breaks, you're not going to see a decisive move on Nvidia. And at the moment, it's just basically burning a bunch of people's premiums after it had this large gap up over here. A lot of people have attempted to short it, and of course it is a fairly overextended since that move. So it's been a lot of consolidation so far, and it's just a waiting game for that break in either direction. Another thing I do want to talk about in today's video is, of course, dark pools. We only have 2 days this week that have provided dark pools because, of course, Tuesday was off. But for today, by the way, this is coming from Monday's data, because remember, signature dark pool prints are delayed by 24 hours, and we didn't have a session yesterday. So 2.8 billion for Monday, which is actually a decent amount considering it was a shortened session. This was at the 444.03 level on the S&P 500. And then going over to Monday over here, you can see that we had 1.7 billion. So just a decent amount, nothing too crazy. This is at 443.46. So just a quick update on dark pools there for you. And these prints are at or around the price that we're at right now, because of course we've been consolidating since that big spike up on Friday. So we do have 2 decent sized dark pool prints up here, especially because Monday, like I said earlier, was a shortened session and we had 2.8 billion. So that is certainly a decent amount of premium. And this comes at a key resistance and supply zone level. So I'd be inclined to think that those are sells. And if we do get that mini pullback coming up here in the near future, then it's going to be very key to see if we have a bounce over here for a cup and handle. Otherwise, of course, we will go back down to where a lot of those previous dark pool prints were in this range here, specifically 4,350 to roughly 4,380 on the S&P 500. There's a decent amount of prints within this range during this time period before we continued up afterwards. So that would be the next minor support before it falls down to the low 4,000 to 4,330-ish around this level. But as of now, I'd like to see the retest of around this range, and that's going to provide us the most information heading into July OPEX, if there's going to be a bid into there or if we're just going to be consolidating into that time period. Again, this would have to hold for there to be a bid, and inversely, if we fell back below, then we'd likely see consolidation back within this zone right here as we go back down to 4,330. So that's what I'm watching at the moment. I'll do a quick update on QQQ as well, just to go over some tech. QQQ actually had a very strong open today, but was unable to close that strong. It still closed within the previous range we were in from back here on Friday as well as Monday. So yeah, we did have a nice strong open, but again, there was no confirmation based on the close. If you are bullish on QQQ, you'd like to see a break above 372.74 because this was a hard sell candle that started this minor dip that we had for 2 weeks ago. Similar to SPX, you're going to want to see, at least if you're a bull, it stay above this gap range. You don't want to see a gap fill, or that's going to mean a lot of consolidation for the rest of the month down around this range of like 358 to 360 or so. And lastly, just to talk about IWM really quick, because there's an interesting setup here. We're retesting a more shorter term downward trend line that you can see here from this blue, only on the hourly chart, but it goes back over to here in February of 2023. And you can see we had an attempt to break out above it, but price was unable to, and now it's attempting again and retesting it as of today. So I'm very much interested in IWM price action because this red box right here is a key supply zone. If price is able to get above the supply zone, it will see quite a bit of upside to, at the very least, the mid 190s. So it could go all the way up to here, which would be very similar to the price discovery we saw back here in February of 2023. So this box is everything right now. It may be attempting a nice downward trend line retest right here and then bounce scenario. There's that potential because this is a possible curl setup, kind of similar, not quite a cup and handle, but kind of similar to that SPX cup and handle. In case this is what's happening, you do not want to see this minor gap from over here fill. So kind of similar again to that SPX setup. You don't want to see that big gap from Thursday to Friday of last week fill for this to be valid. So you'd like to see some type of a bottom, minor bottom that is form between either Thursday or Friday at the latest for there to be an attempt. If there is a third attempt up here on the top range of the supply zone, very, very likely that we do see some form for breakout. So just keep that in mind going forward. Very critical juncture for the Russell 2000 right here. It'll decide if it wants to fall down and consolidate a lot more, similar to the NASDAQ and S&P 500 into the end of the month, or if there's an actual attempt here for a retest and bounce scenario, because IWM has been lagging compared to NASDAQ, the S&P 500, even the Dow as of this year. So there's potential that it could try to play some catch up here into the end of the year, which would be a nice trade setup. We just have to see if this criteria is met right here. Is there going to be a bounce off this level? If so, and there's another retest up here around 189, very likely we see a breakout into the mid 190s, which would be a very nice short-term trade setup to the upside. But other than that, I'll keep you guys updated on some of these setups going forward, especially as our next video is Sunday, and I'll see you guys then.